Hi there, welcome to Kneppy Invest and welcome to February 6th, 2025. There's about 40 minutes left of trading today. And overall, what a pretty good day. Surprisingly good day. XJL up 1.25%. Although small caps, tech, and mining not as good as the XJO. So I'm assuming right now, probably the banks have had a good day. Banks have had a good day. Maybe companies like Wesfarmers, Woolworths, Telstra have had a good day. So maybe today has been the day of the blue chips. Blue chips like the banks. And we can confirm that in a second as we go through the best and worst performing sectors and indices. Then we'll have a look at the best performing companies and the worst performing companies. And then we'll turn our attention to some of the more interesting announcements that have been released today, including the stock of the day, although I did a standalone video on that. REA Group, so won't spend much time on that company. A few other interesting results today or announcements today that I will mention briefly, but no top 5 stocks of the day. All I needed was a stock of the day, which was always going to be REA Group. And then we'll have a look at some of your comments, answer some of your questions, reply to some of your comments. Okay, so let's turn our attention to the ASX today. So with the XGO up 1.25% and not as good as a day as or for small caps and tech, I'm just assuming that maybe banks have had a good day or something else. And then yes, sectors, best performing sectors up is financials up 1.98%, discretionary up 1.84%, real estate up 1.47%. So really, and in fact, if you have a look at the indices, banks have had a really good day, up 2.45%. Gold's had a really good day as well, continuing on its absolute tear, up 1.85%. And ASX 20 up 1.51%. So today has been the day for blue chips. So that includes the banks, probably Telstra, Wesfarmers, those sort of companies had a really good day. In fact, if we look, by the way, energy's had a bad day, so maybe Woodside's down. And if we have a look at the ASX 20, I would not be surprised to see 18 companies up, 2 down. Maybe Woodside, another company down today. Let's see. Oh, 19 up, 1 down. And which company is down? Oh, Pro Medicus. And Woodside slightly higher. So that's not a surprise. Pro Medicus, yeah. What can you say? I'm not going to say anything about Pro Medicus. And the best performing companies, Wesfarmers. And then we have 2 banks, REA Group, the stock of the day, and Westpac and CBA. In fact, CBA might be an all-time high, which is insanity. Insanity for a company like this with no growth prospects and a P ratio of maybe 28. Insanity. Who's buying CBA? Well, maybe it's the the passive ETFs just buying CBA. Yeah. Anyway, Fortescue had a good day as well. So it looks like iron ore's had a good day. Yeah. So who's complaining about a day like today? Maybe me. Maybe my portfolio has not done nearly as well as the market because I'm not invested in the banks, not invested in any of these companies except REA Group, Goodman Group, WiseTech, Aristocrat, CSL. Okay, so I'm invested in a few of these companies, but the best performing companies I am not, am not an investor in. Okay, so let's turn our attention to the top gainers. A company that has been a top gainer a few days in the past, Oz Alrum, Resol's up another 38.1% and has gone past 10 cents. Let's have a quick look at this chart. I think this was a top gainer yesterday. So a couple of days in a row, top gainer. And look at that. I would say this is a plaything for day traders right now. I would almost guarantee you this is a plaything for day traders. They are loving this stock at this point in time. Maybe they look at 1-minute charts. And if you look at 1-minute charts or maybe 15-minute charts, it's in a beautiful uptrend. Yeah. So nothing to complain about when it comes to Oz Alrum resources, but not for me. Share price could fall 30% tomorrow. Yeah, there is change. Yes, today's Thursday, isn't it? Yes. Top gainers, otherwise, company called OzQuest, AQD. I do not remember this company releasing an announcement, but doesn't mean they didn't. Kangaroo Discovery confirmed. That's probably why I don't remember this company, because that's not the sort of title that would draw me in. Kangaroo Discovery confirmed. The market has liked it. Share price up 36.2%. We'll have a quick look at this chart as well, just to see if, whoa, look at that. Yeah, this just gone insane. It's gone from 1 cent all the way up to 6.5 cents over the last 3 or so weeks. So, and look at the volume, really big volume. So this is definitely, could have been a potential trade. And 2 really good days up in a row, actually 3 days. Share price then sort of went sideways for a little bit, and now 3 really good days, up days in a row as well. So a really good chart for AusQuest, but this is not the sort of chart that I am particularly drawn to, because share price has increased a little bit too quickly for my liking, and there could be a massive sell-off over the next few days. You just don't know. And you don't want to be caught in that massive sell-off. That's me. I don't want to be caught in that massive sell-off. Other companies have performed well today, fairly low volume, except for Almonte Industries, AII. Oh, they have an interesting TIG code, AII, but it's probably the wrong company, and nothing. In fact, the last price-sensitive announcement was released on the last day of January. They did an equity placement. There you go. Well, have a quick look at this chart just to see if it's interesting. I would say it's probably an uptrend. Oh, look at that. And this is definitely the chart I would stay well away from. Share price did move into an uptrend sometime August last year. It looks like lack of liquidity. And then all of a sudden, increase in volume, and the share price has just gone exponential the last probably week or so. That, I wouldn't say scares me, but if I was a shareholder of this, I'd be getting out, taking profits. And I'd say maybe today is, there is a word for it when it really pops up on really big volume. There is a word for that. I forget what it is. Anyway, so 3 interesting charts for companies that are looking really bullish right now, but that bullishness could turn negative fairly quickly. Not sure why Pact Group is up 18.5%. That's a weird one. There's been a takeover for this company. It seems like forever. I'm not sure. Don't follow this company at all. What's happened today? Share price has been really volatile the last few days. They didn't release anything. I'm pretty sure of that. I could have missed it. Maybe it was a vote on the takeover. No announcements. Presentation, AGM in November. I have no idea what's happening. If you know what's happening with Pact Group, love to hear your thoughts. Other than that, nothing else here. So let's have a look at top gainers by market cap. Oh, Kelly Partners down a lot yesterday, up today. Who knows what's happening there? Titomic. In fact, Titomic's chart's probably looking really good. It's because it's at 27.5 cents. And yeah, this chart is really nice. I do like this chart. This is definitely a better, in my opinion, this is a better chart than those 3 other companies we looked at the start of this top gainers list. So whatever they're called, Equium, AusQuest, and Almonte Industries. I like this chart much better because we have a history here, beautiful dips and rises, higher highs, higher lows. Share price today, either an all-time high or a long-term high. Probably the only problem, the only negative thing, if I was being nitpicking, is I probably would prefer a little bit higher volume coming in, but nothing wrong with this chart for Titomic. Probably the other nitpicking thing I might say is just the financials of this company. Not yet profitable, not yet operating cash flow, free cash flow positive, but again, being a little bit nitpicking. And the reason I'm doing that is because this company currently has a market cap, I would say, is about 300, 400 million. Yeah, $318 million. So a lot of promise has already been priced into Titomic's share price. What else do we have here? Bet makers, Electro-Optics. Nothing of absolute massive note here. The Oxen, nice little rebound after a bit of a drop. Oh, Pointerra. So at the end of every single day, what I do is I put any possible sells. It's like Zip. I sold out of Zip. I put Fisher & Paykel in my possible sells. Also have a buy list, charts that look interesting now. And I'd actually put Pointerra, but I didn't buy any shares this morning. And the reason I put Pointerra on that list is because the share price pulled back. It had run down 3 or 4 days in a row. And then yesterday it was a doji, which tells me so before that, with the share price selling, the enthusiasm of the sellers was a little bit greater than enthusiasm of the buyers. But when you see a doji, that one-day candlestick is a doji. That means the enthusiasm of both sellers and buyers has reached an equilibrium. And there's a chance the share price might pop up the next day. And also the share price hit the moving average, the 25-day moving average. So indications were we might see a bit of a rise in share price. If we don't see that, maybe the share price will go sideways. So I was thinking maybe the share price will go sideways for a few days and then start to rally. But it looks like maybe the share price has bounced today. Probably would probably prefer, I said probably twice then, I might prefer the little bit higher volume today. That would be a really good sign. Anyway, so Pointera, nice bounce after share price had pulled back. And that's it. Let's turn attention to the top losers. Not sure what we might see here. Oh, Petra down 21.5% on really big volume. I'm ignoring all the other companies because turnover is fairly low. But obviously, Petra must have released something. This name does sound familiar. Drilling confirms potential for world-class titanium project. The market saying, well, no, we don't think this is world-class at all. What are you talking about? I'm not going to open that up because it would probably be just over my head, that sort of thing, particularly when it comes to titanium. Let's have a look at a chart for Petra. This one does ring a bell. And I think the reason this company rings a bell is because the share price really popped up in November, up 140% on the 19th of November. And the chart looked really good. And today is the first negative sign for Petra. Yes, I can definitely see why this company rings a bell. Other than Petra, fairly low turnover, Paradigm Biopharmaceuticals. This is one I am trading. And you will see the share price go up and down a lot in a single day. Share price hit 59 cents a few days ago, which was the previous high as well. So because the share price has pulled back from that high is a little bit concerning. So there is a bit of resistance at that level. Now the share price is right on the 25-day moving average. So we don't want to see the share price pull back any further. So a couple of negative days in the last four for Paradigm Biopharmaceuticals. We also seen a little ramp up in the volume. So that's a little bit concerning as well. And other than that, nothing. So let's have a look at top losers by market cap. We have Myer, Cettire, Star Entertainment Group, Wagner's, Doug. Doug just keeps on dropping. AI Media looks really interesting as the share price keeps on dropping. EZZ keeps on dropping. Not sure what's happening with EZZ Life Sciences. And, Vitrafy. I will actually talk about Vitrafy today. It's a recent IPO. They did release the results today. So I had a quick look at their presentation into what's the thing about freezing? Free stuff. Cryo preservation or something like that. Anyway, I'll just briefly mention Vitrafy Life Sciences when we talk about individual companies. And I might be at that stage right now. So let's do it. Okay. So I've already recorded the stock of the day REA Group. The rest of the companies I'll just be speaking about today are just companies that released something interesting. Bigger companies or interesting companies in terms of Vitrafy. I'm not sure how big that company is. We'll start off with the National Weather Service or News Corporation. I'm not sure why I'm burping. Or News Corporation. The reason I call this National Weather Service is because the ticker code is NWS, which is National Weather Service in the United States. Anyway, typically if REA Group release their results, News Corp is going to release their results because News Corp has a large stake in REA Group. And I would probably question if you do own both, why? Maybe you could own News Corp, not REA Group, to get more diversification. But if you own REA Group, probably no reason to own News Corp. I don't know. I'd love to hear from anyone who owns both and why. Because to be honest with you, the biggest or the best quality asset in National Weather Service, News Corp, is REA Group. If you have a look at their results, I reckon this, that's a horrible. I think you might confirm this. They do have segment review. So 4 segments. Dow Jones, Digital Real Estate Services, REA Group, Book Publishing and News Media. And you'll notice that Dow Jones revenue up 3%, Book Publishing up 8%, which is interesting. I wouldn't think there would be much growth in book publishing, but obviously I'm wrong. I thought book publishing would be sort of like a dying sector. I don't know. News Media down and Digital Real Estate Services revenue up 13%. So that is definitely probably their most high quality asset. And if you look at segment EBITDA, Digital Real Estate up 26%, Book Publishing up 19%, and News Media up 30%, even though revenue is down. So maybe a bit more efficient when it comes to News Media. Share price up 5.6%. And the chart probably looks pretty good. And I'd say the chart looks pretty good because REA Group's chart looks pretty good as well. In fact, this chart looks, it looks pretty good. So maybe I'm stupid by saying, why would you own both? You could own both, get double the exposure to REA Group by owning REA Group and News Corp. Yeah, chart looks really good. There you go. Chart looks really good. I'm just not a big fan of the rest of their assets. I'll put it that way. Well, book publishing, what's happening there? What is happening there? Let's talk about this company called Vitrafy, VFY, a recent listing on the ASX. Have no idea what the market cap of this company is. Let's have a look via what do you call this? Market Index. Market cap is $60 million. Now, this is more of a story stock. And the reason I say that is when I saw the results, I went, oh, I wonder if this is a company that is profitable, cash flow positive. So I just wanted to see, because I've never looked at this company before. I just wanted to see. And they have revenue of $57,000 and loss of $25.6 million. I went, oh, okay, we can just move on. That's exactly what I did. I didn't look at anything else for Vitrafy Life Sciences. That is all I looked at. No revenue at all and big loss making. But they did release a presentation. I thought, what can you talk about in a presentation when it comes to half-year results when you have no results? Literally no results. But I thought, this is a recent IPO. When I say recent, I mean November. So recent IPO, don't really follow this company at all, never looked at it, had no idea what they do. So I thought, why not just have a little peek at what they do? And it is actually sort of interesting because they do talk about cryopreservation? Yeah, cryopreservation solutions. I was like, what the hell does that mean? Do they, freeze bodies? I don't know, freeze bodies. So I went through this and yeah, it's not about freezing bodies. It's a little bit more, I wouldn't say nuanced than that, but they do freezing stuff. They definitely freeze stuff, but they freeze stuff in regards to animal reproduction. So we're talking about sperm, I suppose, and eggs maybe, blood platelets, not sure what exactly that is, and human cell and gene therapy. So one of the things they are talking about here is salmon and how their technique is sort of like fresh fertilization compared to industry average, which is 30%. So they are near fresh fertilization, which I suppose is a good thing, but not getting much money from that via Huon agriculture, aquaculture, animal reproduction, bovine, much better than industry standards or conventional cryopreservation. So obviously I'm pretty ignorant when it comes to cryopreservation. I know nothing about this area. Oh, by the way, and blood platelets, way over my head. But they have commenced a phase 1 study with the USAISR, which is, I have no idea, US Army Institute of Surgical Research. There you go. So it's US Army. Now, if you actually go back, their vision is to, no, they have something else here, which I found interesting. It was something like the world leader in cryopreservation. Here it is. Our mission is to become the global leader in cryopreservation and set new industry quality standards for cryopreserved materials, preserving life. Okay, so interesting story, but it's a story. No revenue or very little revenue, loss making, that sort of thing. So let's have a quick look at the chart, although there's probably nothing to really look at here for Vitrafy. Yeah, share price has tumbled a fair bit since they listed, from $2.10 down to $1.51. So actually, this is a really negative chart. So move on. Let's move on from Vitrafy. What else? Pexa down 2.96%. They released 2 announcements back to back. The first one was resignation of CEO Australia and Pexa KMP. I was like, oh, that's. In fact, I read this just after I read this REA Group CEO is resigning, and I thought, oh, it's a day of resignations. So this is Mr. Les Vance. He's currently the CEO, Pexa Australia and KMP of the group. A resignation taking effect from the 21st of February. But just after that, I noticed there was a first half year 25 non-operating items guidance update. I thought, oh, is that related? 1 minute later. Is it related? Is this why the CEO of Australia is resigning? Probably not, I think. I did go through this and I was like, nah. It's just, I don't know. It was just, they just mentioned here, Pexa expects to recognise a non-cash impairment charge So it's a one-off. And I don't really pay much attention to one-offs. I think maybe the market might for a brief moment, but it's a one-off. And it's also a non-cash impairment. One-off, non-cash impairment, who cares? That's the way I think about this sort of announcement. Share price down, but the CEO resigning is enough for me to have a closer look at Pexa. So let's have a look at the chart. CEO Australia, I should also say. Look at the chart. Chart was looking pretty good back through most of 2024. Turned negative towards the end, and share price in a downtrend. A little bit of volatility today, so share price was down to 1160, has recovered. So it looks like there was a little bit of negative sentiment in this company today. Have a look at the 15-minute chart. And in fact, let's have a look at the 1-minute chart, and the sell-off was on open. And maybe, yeah, look at that. Massive sell-off on open. In fact, on open, share price was down 7% and was down even more within 3 minutes. And share price has rallied. So again, don't always panic on open. We saw that with Pexa. We also saw that with REA Group today. Share price opened down and then is now up 2.5%. Okay, so that's Pexa Group. Another company I just want to discuss is Beach Petroleum. Ooh, this is interesting. I thought the results were pretty good. I thought on the surface results are good. I don't really follow this company all that much. So the question is, are the results better than expected? And any sort of outlook from the company, was that in line with the expectations or better? So I have not had a look at the chart or the share price reaction or the market reaction yet for this one. I did like the results, but I can be wrong. And I can be wrong significantly. So let's have a look at the share. Oh, down 4.62%. So again, this is sometimes why I just like to wait, just to see how the markets react. The share price down, which means the market didn't like their results or maybe the outlook. Okay, so let's have a look at their media release. Now, this is the reason I'm paying a little bit more attention to this is just because of the chart. We'll have a look at the chart in a second. The chart actually did look pretty good. So the first thing I noticed was everything was up. And I do like when anything is up. So for instance, production up 15%, underlying profit up 37%, interim dividend up 50%. First half financial performance tracking in line with financial year 25 targets. It sounds positive enough. Anyway, so the market just doesn't like it. Financial year 25 guidance. So capital expenditure, no change. If you look at the financial year 25 production guidance, so previously it was more broad, between 17.5 and 21.5. They've narrowed their guidance to between 18.5 and 20.5. And I wonder if that has disappointed the market for some reason. I don't know. It just doesn't look like it should, but you just don't know. So there might be something in this that I've completely missed. There's a financial year 25 guidance. I don't think that's... I don't know. Let's just have a look at Beach Energy in Cavalry. Is there any mention of Beach Energy here? Here we go. Beach Energy shares drop after tightening production guidance. Well, they've tightened it, but it's not really a decrease. It's just tightened it. They've narrowed it. Anyway, so that's the explanation Cavalry has given. Anyway, so let's have a chart for Beach Energy. Oh, that's the 1-minute chart. And again, so share price did dive on open, but we didn't see that rally we saw with REA Group and Pexa. So I suppose that means a little bit weaker reaction from the market. The other two reactions were overreactions from the market. So this is a chart for Beach Energy. And I did like this chart. We had the moving average crossover back in late December. Share price just kept on up and higher. And then today, share price down. So probably a little bit less bullish about Beach Energy right now. Now let's talk about Magellan Financial Group, because I just noticed at the top here, Magellan shares rally as monthly FUM rebounds. So let's see. I did actually notice this. Share price up 2.22%. Really? I expected a little bit more than that. Funds under management. So this company releases this announcement every single month. In fact, they release it, in the first week or so of the month. Yep. So the 6th of February, 8th of January, 5th of December, and Anyway, so the main thing with this one is I don't want to see outflows. So You can look at the funds under management. You'll notice it has increased from 38.6 billion to 39.1 billion, but that does not tell you about the outflows or inflows. Both retail and institutional flows were flat for the month, so no outflows, no inflows. I think this company has been, or this fund has been outflowing for a while. It's not an inflow, but a little bit of a positive shift here. The other thing to mention or note with this company is the CEO resigned. Was it CEO resigned or someone resigned? I forget. Who was it? Someone resigned recently. Update to executive investment teams. Even though it was not market price sensitive, the market didn't like it. Share price pulled back significantly. So is this a time to think about buying on this dip? That was a significant pullback. Our share price has rallied the last few days. So I'm not sure the rally today is anything to do with the FUM. It could be just a rally. Share price has rallied back up to a resistance level. There you go. Let's talk about Findi. Findi. I had been a share of this. I've completely sold out. Share price up 3.41%. It was up more than this. And this is the problem where the share price has moved into a bit of a downtrend, a little bit more negative sentiment. When the company does release something positive and the share price might try to rally, there is a little bit of sellers, increase in sellers who want to take profits or sell out of a losing position. Particularly the share price has dropped a fair bit over the last month or so. And I think that's the problem with Findi, even though they have released what seems like a positive announcement. Findi secures additional 900 ATMs with Union Bank of India. This will increase the company's profit, and they have mentioned it here somewhere. New contract delivers $75 to $80 million of revenue and EBITDA of 33 to 38 million over a 7+1 year period. Yes, so full deployment is expected to contribute an additional $10 to $11 million of annualized revenue and $4 to $5 million of annual EBITDA. How much does it cost? They mentioned the cost will come through cash flow or something, if I remember correctly. They do mention somewhere where they're getting or how they're going to pay for this. Oh, here it is. Funded from companies' internal funds and bank facilities. There you go. So maybe debt will increase. Anyway, so let's have a little chart for Findi. I thought this was a positive chart, positive announcement. Share price was up a fair bit, 1.67%. But this is the chart. In fact, you can barely see the share price up today. And the reason is the share price has pulled back a fair bit. It was up as high as $8 in November, is now $4.60. In fact, the share price more than halved at one point, and the share price has moved into maybe a weak downtrend. We have seen the share price come up from the lows, so I really want to see the share price get above $5. But whenever the share price tries to get above $5, we do see a bit of weakness, and not big volume coming in today. So it looks like maybe the puff has come out of Findi. You know what will solve that? Really good results or some sort of upgrade. We could finish this with two sort of REITs. 360 Capital Mortgage REIT, share price down 1%. Do you really want me to go through this? Probably not. This is more residential REIT, which is not that common, I think. I did have a look at their presentation, and they do have some office, if I remember correctly. Maybe it's industrial, but it's mostly here it is. Yeah, this is what I remember. So 85.9% residential, 13.6% commercial. Yeah. And so mostly residential. The other thing I do always have a look when it comes to REITs, if I have a look at REITs, is distribution yield, 10.2% for this one. NTA per unit, $5.94. Share price is $5.80. So there's not much of a discount. So that's actually interesting. The distribution yield is quite high, or seems quite high, but the NTA, there's not much of a discount there. Anyway, so that's interesting, and maybe because it's residential. So let's have a look at a quick chart for this one. The other thing I look at is gearing, not whale. I don't think whale is relevant for this one because it's residential. I could be wrong. I could be completely wrong. Anyway, so, well, they do have, no, that's not whale. And you can have a look at some of their portfolio here. I think, or maybe not. They have nice pictures as well. Anyway, let's have a look at the chart. TCF. TCF 360 Capital Mortgage chart for a REIT. This chart looks really good. Probably the best looking REIT chart there is. In fact, this is not even in my REIT. Yeah, I'm gonna have to put this into my REIT watch list. There you go. Thank you, 360 Capital Mortgage REIT. Pays attention to maybe have a look at some half-yearly reports that you've never had a look at before. The other one was GDF, which is Garda Property Group. This one is definitely at a discount to NTA. Had a quick look at this particular, I think it was a presentation. They also have a property book, so I'm assuming that is all their property. I can't remember if this was industrial. I think it's industrial and some office, and they're selling off some of their office. Anyway, so let's have a quick look at this one. I do like to see numbers. Here we go. So Whale is 4.5 years. WACR, WACR, 6.21%. 85% industrial. Yeah, 85% industrial. 15% office. And by what I did read, they're selling off some of the office. So maybe they're going to more industrial, which would mean I'd probably like this to re-up a little bit more. You can keep on going down. They did have some interesting slides within this presentation. The yield's not that high. That's one thing I do remember. NTA per security 162. So current share price is $1.13. So a nice little discount. Gearing is 40%, probably a little bit higher than what I would like. Income return of 7.2 cents. So the yield is not that high. Yeah, 7.2 cents. So it's on about 6% yield, which seems fairly low for that sort of discount. You'd notice NTA per security has been dropping in the last 4 years. Whale has been dropping in the last 4 years. Payout ratio around about 100%, and gearing up to 40%, which is the highest it's been in the last 6 years. Talking about Garda performance, and this one interesting on the right-hand side. So 31% discount to NTA and ASX discount to NTA. So there's a lot of REITs at a discount, but they're just comparing themselves to other peers. There's one peer, one of their peers is at a 34% discount to NTA. So a lot of REITs are at discounts to NTA. There you go. So this, I do like tables like this because it goes through FFO per security, distribution per security, payout ratio, that sort of thing. And a lot of these REITs have lots of tables like this. Talk about debt, income statement. Don't really care about the income statement. Okay, so let's have a look at some of your comments. Yeah, that's all the companies I want to talk about. Oh, REA Group, by the way. REA Group. Not sure if I've mentioned it much in this video. I have done a standalone video on REA Group. Share price up 2.26%. It did open lower. And the reason it opened lower is because the CEO has resigned, Owen Wilson, not the actor, the CEO of REA Group. He's resigned, and that's added a little bit of risk, uncertainty to REA Group. And also, they did increase some of their costs. I forget what it was, but costs had increased a little bit. So on open, the share price did drop, but it rallied through the day. So a bit of an overreaction from the market on open. I can definitely understand why. By the way, the results beat expectations. So I can understand why the share price would be up because results beat expectations. But I also can understand why the share price might have been down because CEO is going, retiring, and also some of the costs had actually increased. Some of their expected costs had actually increased. Okay, so that's REA Group. Stock of the day. Look out for that standalone video. Now on to some of your comments. And there's a really long comment from Happynow. Another great video. Thank you very much. Really helped my mind in seeing some of your thoughts in shares I own. And amazingly, can share some insight. I love when viewers share insight because my site is fairly narrow. No, I'm kidding. But individually, our site is quite limited. But collectively, our site can be really broad, long, whatever. We can see collectively, we can see like a hawk or an eagle, but individually, we can see like a blind mole. Anyway, so I love when people provide some sort of insight. We had that the other day with someone in regards to Pro Medicus, someone who uses the products and believes in expansion, that sort of thing. So what does Happynow here say in regards to their insight? Bluebet acquisition. Customer of Top Sports. Long story short, for less than 2 weeks, I won some money, less than $1,500. Congratulations. and was automatically reached out saying that and lost several perks on my account. This is why they are positive acquisition for Bublet. Only utter trash bag losers on their customer listing, and you win even an ounce of money, you're gone. Oh, I see what you're saying. They're sort of like a card reader. Like if you read cards, you go to casino, you get thrown out because everything, all the odds are in favor of a casino. So when you do or are able to read cards, and I actually did try card reading, it does work, and they notice you're reading cards, you'll get thrown out because you're putting the odds in your favor. Anyway, so that's what you're saying. It's if anyone is successful using top spots, they get rid of you. Okay, whatever. Anyway, very tight business model and absolutely zero customer service model. So you ask the question, how do they grow like this? Yet, yes, great, making money with all these losers who don't know any better day in, day out and pay their bills and lights. Okay, yeah, and sort of understand that. You want all the losers, all those who don't know how to bet. Funny enough, I did read or hear the other day how professional bettors make money. They don't put they usually in a race, like a horse race, what they do is they put a lot of money into a lot of the positions, and they put most of the money into, they use probability, that sort of thing, and they put most of their money into those who are more likely to be a better payoff, that sort of thing. So they don't put all their money into one or two horses. They sort of use the whole field, if that makes sense. So thank you for that insight, Happynow. Scott says, I'm surprised at your reaction to RPM Global. After a pullback from all-time highs, that retreats until it's setting just on top of the previous all-time high. The only way it could get more bullish was if it was breaking into all-time highs. Anything above 275 is a strong buy in my humble opinion. I'm not surprised, just popped 4% this morning, especially breaking out of an inverse head and shoulders. Okay, one of the great things about technical analysis is you can have different thoughts. What's his name? Andrew Page says, wow, technical analysis doesn't work because if it did work, everyone will be doing it. But that's one of the great things about technical analysis. You can look at the same thing, you and I can look at the same thing and get a different or have a different thought, different opinion about it. And that's a great thing about it. You can have different thoughts, and to be honest with you, we both can be right. So I just see the share price as actually in, what is this? If we just zoom out, I would say the share price was in this really short-term downtrend. So really short-term downtrend like that. And it sort of hit this downtrend 2 days ago, sort of break through that downtrend yesterday and then has rallied. So that's another, I didn't even mention that yesterday. You could do that. So there's many ways to do it. I would say if the share price fell below 260, that would be really bearish. So the share price fell to 260, that would be really bearish. But today is a good day. And I'm not complaining. I'm a shareholder of this company. I'm not complaining. But we did see the share price, or have seen the share price pull back a fair bit. You could say the share price was at a support. Is that a support? I suppose you could say it's at a support zone, sort of in this area between 265 and 280. It's in a support zone because of what we saw previously. Anyway, so again, different opinions, different thoughts. That's a great thing about technical analysis. I suppose even you could do that with fundamental analysis, but when a company has profits or increase in revenue of 20%, increase in profit of 26%, there's not many ways you can read that. Anyway, so thank you for that, Scott. And I think we both can be right at the same time. And I would say, just with today's price action, a little bit more bullish, I would be. And that's the sort of thing I'm waiting for. I want confirmation of that bullishness. I wouldn't have been at that point yesterday because the share price wasn't doing anything. But today we have seen share price rise, so I'm a little bit more bullish. And I would possibly, if I wasn't owning this, I'd probably take a position today or maybe tomorrow. So thank you, Scott. Excellent, excellent. Fishball 1634. Can you do a video on Civmec? CVL, training this one as well. I know you'll say it's a high quality stock based on its chart. So based off a chart, I might, but the company might be a completely different thing. But let's dig deep into the numbers and see how you like it. Civmec. So let's have a look at the chart for Civmec. CVL. I am trading this right now. Share price going sideways, been going sideways for a little bit, but the chart looks pretty good. Now, if you have a look at the weekly charts, we don't have a long history. So we have 6 years of history. I I suppose over the 6 years, you do see the chart of a high-quality company. The other thing to mention here, a pretty important thing, is look at the volume. Look at the massive increase in volume in the past year. That's a really good sign. That increase in volume is a really good sign that there is something going on here. Maybe fund managers are taking positions in this company. So, share price has really done nothing over the last few months, just going sideways. That's okay with me. I have a sell price at about $1.17, bought $1.10. So I have no problems with this chart at all. Okay, on to the company. Now, we might not have full history when it comes to Civmec. First thing is what they do. So here's the thing. I'm trading this company. I don't know much about what they do. I'm just trading the chart. And that's actually a benefit. I think that could be a benefit of just using technical analysis. You don't have biases against companies that you don't like in terms of what they're doing. And I definitely have biases. I have really significant biases against some companies. And even now, I refuse to trade those companies just because I have those biases. Anyway, so Civmec Limited Investment Holding Company provides construction engineering services. I sort of knew it was somewhere along those lines. I thought, in fact, if you were twisting my arm, I would have said this was a mining services company, but I would not have been comfortable saying that. So construction engineering services to the energy, resource, infrastructure, and marine defence sectors in Australia. And that takes fabrication projects such as structural steel, plate works, tanks, vessels, materials, handling equipment, subsea, offshore structures, etc., etc. Now, the company should release their results soonish. CV, I'll see if they've mentioned that when they're going to release results. They have not. But we can go back 1 year. 1 year ago, they released the results on the 15th of February. So it doesn't mean they're going to release the results on the 15th of February this year, but we do expect or can expect results from Civmec within the next 2 weeks or so. Okay, so when I'm always discussing or thinking or just researching a company, the first thing I always look at, and this is the first time I've done this with Civmec, by the way, first thing I look at is revenue growth. Is revenue growing? You can look at 3 different time frames in FinChat: 3-year, 5-year, 10-year. I do prefer revenue per share growth, and in Guru Focus, you can look at revenue per share growth, and that's one of the reasons why I'm thinking of going back to Guru Focus. But Guru Focus, you have to spend a little bit more money. So revenue growth, 3 years, 15.3%. Over the last 5 years, 16.2%. Pretty good. I do like that revenue approach. I do like that revenue growth. Earnings per share growth over the last 5 years, 59.7%. When you get revenue growth like 16%, earnings per share growth 60%, margin expansion. Margins, gross margins 11.5%, EBITDA 10.8%, operating margins 8.9%. I'm wondering if margins have expanded the last few years. You could just check this by going to financials and looking at the ratios, but that would make sense. Return equity 13.8%, return invested capital 8.3%, return in capital employed 14.2%. So margins straight away, low margins, not a surprise. I would probably expect companies like this, construction and engineering services companies, to have low margins. So the chart looks really good, and the revenue growth is good, but margins are low. And that would be a definite case to not call this company high quality. Also, construction engineering, there might be some cyclicality to that. And again, if your company does have really low margins, when the company does see a bit of a downturn, profit would be hit significantly, potentially significantly. Return on equity is above 10%, which I do like. Return invested capital below 10%. So borderline high quality when it comes to those quality metrics. I call those quality metrics or efficiency metrics, that sort of thing. P ratio 10.5. Is that right? A markup of 474. And yeah, so I'm just going to have a look at this. Financials. Have a look at total revenue growth. It's growing. But you can see, I don't know how reliable this is, but you can see some years it does drop, but revenue has grown significantly over the last 5 years. Another thing I always like to look at is just shares outstanding. Has shares outstanding increased? And the answer to that is no. So they have not increased shares on issue. So that's actually quite important. So because shares on issue haven't increased, that means revenue growth, we can look at that instead of revenue per share growth. The other thing was margins, wasn't it? Just have a look at gross margins. They must have increased the last few years. Yeah. Well, from 2018-19, they have increased. So remember that 5 years, revenue has increased, but earnings per share had increased significantly more than revenue. So 5 years ago was 2019, and profit margins or gross profit margins have doubled from 5.2% to 11.5%. But over the last 4 years, been flat. So before that, when you can see gross profit margins dropping between 2015 and 19, that's actually a negative sign. Okay, so I know you'll say it's a high quality stock based on its chart. Based off the chart, well, I could go down that route. Based off margins and the quality metrics or the efficiency metrics are sort of borderline, but margins are the thing that concern me about Civmec. So yes, chart looks pretty good, nice growth in revenue. Margins are my main concern. Now, there are some high quality companies out there that have low margins. Hello, Costco. I would define Costco as a high quality company because their moat is their margins, which is a weird thing to say. Their moat is their low margins. And when I say low margins, their profit margins probably, where is it? Gross margins 12.7%, operating margins 3.7%. So really low margins for Costco, but their PE ratio is 60. And their moat is their margins. Yeah, which is weird to say. By the way, Costco revenue growth is about 10%. Earnings per share growth, about 13 to 15%. So the margins must be expanding. And dividend yield, 0.5%. You don't buy shares in Costco for the dividend yield. Okay, so this is not about Costco. This is Civmec. So Fishbowl, it's just the margins. That's my main concern. So I'm happy just to be trading this. And when my trade goes against me, I'm willing to sell. So this is more of not a long-term hold for me. It's more of a trading stock because of the margins. Okay, I'm just going to go through this quickly. Oh, Fishbowl says, I thought you said you would avoid investing Chinese stocks. Would you not count EZZ to be a Chinese stock? No. The CEO is Chinese and they mainly target Chinese tourists. Now, what I mean by Chinese companies, I mean Chinese companies that are based in China who come over here to list. So this happened in 2016 a lot. I can think of 5 companies that did this. Chinese companies who had all their operations in China, who came over here to list on the ASX. And I found that weird. And all those companies went bye-bye. So this is a little bit different. So EZZ is not the same. They're not Chinese-based. I don't think they are. So if you have a look at EZZ, and when I say Chinese-based, I mean these Chinese companies had all their operations in China. And what I think they were doing is a lot of the shareholders or the owners of these companies wanted their money out of China. And the way to do that, and one of these companies' share price dropped something like 60 or 70% when shares came out of escrow. And I have no doubt the whole reason they listed on the ASX was for some of their owners or shareholders to take their money out of China and put it into Australia or United States or Canada. Anyway, so contact us about us. So yeah, I just want to see where they have their. The other thing I'd like to see is the history of where's the board of directors. So if you're really concerned, what is the history of Mark Quinn, the executive director and CEO? I'd like to see what his history is, but I don't think this is like those companies back in 2016. And again, none of those companies exist anymore on the ASX. Anyway, so that's me talking about EZZ. Anyway, it's a little bit different. It's different. It's different. All right, that's all I'm going to talk about in today's video. Sorry I haven't been able to get through most of your comments, but anyway, so if you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.